And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And as always, it's with an eye toward helping you formulate a framework, backdrop, and really be prepared not only for next week, but also beyond. So let's go ahead. As usual, lots to cover. It's really been rather exciting period in the markets over these last certainly few weeks to say the least. So we are going to go ahead as usual, drill down, take a look. Where are the markets? What do we need to be on the lookout for? Is there a constructive backdrop? And then, of course, we all will today in this for this week want to cover the results of that vaccine, but more importantly, the results within the broader markets. There certainly was a very dramatic shift, and we are going to get behind the scenes there, take a look at areas that are newer that are well worth a look. So also, we did see a big, some of you may have seen the headlines as far as the very big short squeeze that took place in a lot of stocks that were down and out because of this continued increase in COVID-19 cases. And there really, that news of the vaccine from Pfizer on Monday was highly unexpected. So some of these travel areas, but we're going to get into that and take a look at some of the stocks in that area that do still have more upside. And then we are going to take a close look at that move into cyclical stocks. And that's going to be that recovery play that is the result of the vaccine, but there's more to that move into cyclical. So we're going to take a look at that. And then taking a look also at some of these biotechnology stocks, because it's a very, very vibrant area. The markets were up a little over 2%. Biotechs were up a little bit more this week, but each and every week there are stocks that are just really setting up quite nicely. So most of them do not have earnings. So we're going to take a look at how you can use the chart, use the technicals to really bring you into some of these biotech stocks that are poised to trade higher. So let's go ahead and get started. Taking a look here at a daily view of the S&P 500. And for those of you that follow this show, I want to say welcome back, but also remind others that some of these simple moving averages, if you're new to this show, that I pay very close attention to as a guide for where the markets are. So this green line is your 10-day simple moving average, the purple 21-day, and then the all-important 50-day. That's the red line here, 50-day simple moving average. And this really is, I often say, is the line in the sand. We see a break below that level. It can be foretelling as far as potential future downside on the near term side, but good enough this week because we did continue last week's post-election rally that brought the S&P back up above this 50-day in very bullish fashion. And of course, this week, that carry-on rally Monday was a big day. The S&P 500 did hit a new high. Take a look at the volume characteristics. That is very, very compelling and also very telling. Institutions want it in. You want to see those type of money flows to potentially continue the advance in the broader markets. And some of these outside momentum indicators, we have the RSI, that's a relative strength indicator. You want it to be up above this dash net neutral. We're heading north, so in good standing there. Stochastics are another momentum indicator. I like to use it for these broader market indices because it can be really quite telling. It's going to be a bit faster moving than some of your other momentum indicators, also up above that net neutral 50. So at the end of the day, the markets are in very good standing, a nice sideways kind of back and fill action, very constructive after Monday's big move. So of course, now we do want to go ahead and drill down just a bit more, take a look behind the markets and go ahead and take a look at these sectors. So what I've done here is we're looking at what's called a candle glance view. It is a 2-month daily chart of the underlying S&P 500, the 11 sectors. And I've gone ahead, added a relative strength indicator, sorted it in descending. I'm going to go ahead and update that so we have the latest view here. And you're going to see some surprising movements, certainly from my work for many, many months out of that bear market. We did see discretionary, a lot in the way of digital retail sales, technology, keeping people connected, and even communication services, internet work. The three horsemen, as I would call them, they were always up there in the forefront. We did see a bit of faltering in September and then into October, but take a look now as far as where your relative leadership is. And we do have a mixture that is taking place right now. Now, interestingly, consumer staples up here in the forefront, they did outperform the S&P 500, but not your best performer, likewise with healthcare. So what we are seeing is kind of a dual move here where staples, healthcare, REITs, these are, and even utility stocks were up higher than the markets this week, up 3%. But certainly up here in the forefront, we are seeing again two actions that are taking place where we're seeing these defensive areas move up to the forefront. And to be fair, they are also areas that have been underperforming. So I would not argue that it is a defensive play per se. Rather, it's a move into these undervalued areas. And then also we can see a move into other cyclical areas. And that, of course, is the other big move taking place. Take a look here, financials, industrials, financials were up 8.3% this week and 5.4% on the industrials. And then energy, big mover. It's down here on a relative RSI basis, but energy stocks up 17% this week. And we're going to drill down into some of these energy areas because, in addition to being cyclical, there are other dynamics that are taking place in this area that bear a closer look for those of you that are perhaps value oriented and want some of these higher yields that these areas do offer. Let's go ahead and drill down a little bit further from here because we want to get a even closer look at some of the sub industry grouping within those sectors. And again, this 2-month daily view, I've gone ahead and added the NASDAQ. We're also going to take a look at the Russell 2000. We want to pay attention to yields. Yields are on the uptrend. You need to know about that because there are specific groups that are going to benefit from that move into bonds. And then we did transports and banking are here as well. Again, RSI. I'm going to go ahead and update that and take a look up in the forefront. This is an area that had been lagging for quite some time, but we are looking at the Dow, and this is the Dow Jones Industrial Average, of course, is heavily weighted in those cyclical areas, that big gap up 4.1% on the week. We're going to take a look at a couple of the bigger Dow names, help you get your arms around some of the more interesting looking stocks within the Dow. And then KRE, this is that banking index. And we can see that it had a big gap up here. Now, this big move on Monday was as we saw the vaccine announcement unroll, a lot of money flowed out of bonds back into the stock market. And that, of course, these higher yields are going to benefit these banks. And then banking stocks by nature are also, as the economy recovers, that's the anticipation here now that the economy will recover in a swifter fashion. Bank stocks do tend to lead in that recovery phase. And then we can move down here further because semiconductor stocks are up here in the forefront, but they were actually down for the week, down 0.7, and relative to the NASDAQ It was down just a bit more than the NASDAQ, but it is a heavy weight in that area. But what I did want to point out to you here is on Monday, it did spike to new highs, the semiconductors, before pulling back. Despite being down and relative being in an underperformer, semiconductor stocks are still very much in an uptrend. There are specific areas, specific plays within semi that are really going to be their growth prospects now and going into next year are quite strong. Those of you subscribers to my MEM Edge report will certainly be well on top of that, where we've highlighted about 3 or 4 real winners in that space. So as we go ahead and move on further, I do want to share with you that uptick in the treasury yields. This is the 10-year treasury yield index. We'll take a quick look at the weekly just to give you perspective, because this is a move that has been on the prowl here for 3 weeks. And we did highlight some bank stocks over that period. And then, of course, MEM Edge report has cherry picked some leaders in that space as well. So that's a view of the markets as far as where we are and going behind the curtain. One last thing I did want to share with you is something that I shared on yesterday. I participated in the Daily Five, which is a daily 10-minute video that select individuals do. And yesterday I did that. And what I highlighted there, and I'm sharing it with you here, is a comparative view going back over the last 11 days. And it's a comparison between this red line is the Vanguard Value ETF, and then the blue line is the Vanguard Growth ETF. And quite simply, I wanted to point out the dramatic outperformance of value stocks, up 9.5% over the last 11 days, versus growth, which still has a significant move, but not quite as high. If you have not seen that, go ahead and take a look at that Daily Five. I highlight the 5 value stocks that have the most upside potential. We're going to take a quick break. When we get back, we have lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm going to go ahead and start. This is from, of course, StockCharts.com, that front page. You can go ahead and access the performance of various sectors, and then from there, drill down behind the scenes, get information on industry group work. I talked about this move into cyclicals, energy, financials, industrials, all part of that cyclical areas that do benefit from an improving economic outlook. And then we can see that REIT stocks, also a recovery play in the sense that a lot of these, whether it's hotel REITs or even residential, have really had a nice pickup here. But we're going to focus right now on industrials. So what you can do is go ahead and click on to that sector and take a look at some of the underlying areas. And aerospace had a very big week. I'm going to share with you one of the bellwether names and potential reason for this significant move into aerospace. Now, this is Boeing, BA. For those of you that follow the markets very closely, you may remember that they did have difficulties with their MAX airline following 2 fatal accidents. And that was 2 years ago. The stock really, let's go ahead and take a quick look at a weekly here. It has had a very generally tough period subsequent to that. But more importantly is this gap up this week for the stock. And a couple of items come into play here. One is that they are earlier this week in line with the vaccine, because Boeing does, of course, provide airplanes to some of these major airlines. There also was movement as far as the FAA approving a renewal of that 737 MAX, and approval of that to go back into play, if you will. So, in addition to this big gap up here in Boeing, there are a number of suppliers to to Boeing that would benefit from an FAA approval. So we're going to just take a few minutes here, share with you some of the bigger names that are suppliers to Boeing that could benefit. This first one is Spirit Aerosystems. Not It's different than the Spirit Airlines, and we can see this nice gap up here. This particular company does provide components to Boeing. They were down 75% going into that Monday of this week. So nice gap up, stock breaks back above this 200-day simple moving average, big, nice volume characteristics, an RSI and a MACD that is constructive looking. One other thing I did want to point out to you, and again, MEM Edge subscribers of my report will be aware of that. We've been on the prowl for a move back into industrials because they were beginning to report constructive earnings reports. This is Triumph Group, TGI. In addition to supplying to Boeing, they came out with numbers on November 5th that were 53% above estimates. So we're starting to see a lot of these industrials coming in with numbers. RTX is Raytheon Technologies, another stock benefiting. We can see in the past where these industrials had found resistance at this downward trending 200-day. So now, as they break up above, nice volume characteristics, RSI, MACD in positive territory, I would say put them on your radar screen. RTX, about 2/3 of their revenue is from the defense industry, and there's an anticipation, regardless, that Biden will continue to increase spending in defense related. TDG is another one that just reported prior to this week, and we can see this is when, after following their report of earnings, TDG broke out of this nice 2-month base on big volume. The company came in with numbers that were 53% above estimates, and then the subsequent possibility with Boeing, they do supply to Boeing, the stock is gapped up further, but it did pull back very orderly to this upward trending 10-day simple moving average. And then we have an RSI and a MACD that is in good standing. One last stock that we can take a look at. This has been a favorite of mine in the past. It's one of the better run, if you will, aerospace and defense stocks. This is HEICO, HEI. This stock did also come in with numbers that were 40% above estimates, and this is prior to Monday's gap up, all taking place on very significant volume. So what occurred here that is also constructive on that Monday gap up is a base breakout of a 5-month base. For those of you not familiar, the longer your base breakout, so historically and statistically, the longer your potential advance out of that base. One last name that we can take a look at that is in also in this defense area, LHX, and I just wanted to point this one out. They just had a lot in the way of new orders coming through. Let's see if we can get this up. Okay, LHX. And this is L3 Harris, another one that had a big move up here because they did come out with strong numbers. They also announced a share repurchase program. We can see this green line coming up through the blue. That's a golden cross. This is prior to these, this is after these other earlier golden cross, a secondary indicator, but confirmation that this downtrend may very well be behind us for this stock. Let's take a look. I'm going to share with you if we have time, 3 bellwether industrial names from the Dow, big component. this is 3M. Not the most attractive chart, but it is finding support this week above each of its simple moving averages. And the company's doing a lot in the way of restructuring. They're selling off parts subsidiaries that are not faring well, drug delivery, food safety business, and so forth, but they are really expanding their area within healthcare. And the company did announce today their October sales were up 3% year over year, constructive. They do have a saliva-based COVID test that they're anticipating will be rolled out in the beginning of 2021. So I would kind of keep it on your radar screen. It's not a name that I generally would traffic in, but for those of you looking to participate in this move into these cyclicals, this is Caterpillar CAT, construction and mining equipment. This is that gap up on the news on Monday, and the stock on the vaccine news, the recovery play, it really held that gap in quite well, which is constructive. They are also benefiting from the uptick that we're seeing in oil and gas. They provide engines to drillers, among other areas. A lot of these stocks have nice yields. Caterpillar, 2.4% yielder. So I'm going to leave it at that as far as the real deep industrials. But we can just take a minute here to look at some of these energy stocks because, again, I talked about dynamics that are in addition to the move into oil because of the recovery, the concept that more people will be traveling, more need for oil and gas. I'm going to share with you a couple of stocks that really look constructive as far as their charts. And we can see this nice base breakout on CNQ. The company did report their earnings, and this is what I talked about as far as the industrial and energy and other areas. It's not just a recovery play. They're coming out with good numbers. CNQ 270% above estimates. And the company is doing a lot in the way of cost saving. A lot of these energy companies have had to do that. There's another dynamic taking place within energy, and that is a lot of consolidation. There were 4 takeovers, mergers that took place within energy this week. EQT, not overly dynamic, but it is being talked up as a potential takeover target. Another energy guy that came in above estimates is Cimarex, XEC. They were 131% above estimates. Another company that it is a smaller energy company, so it's also out there being talked up as a possible takeover target. And then one other area we can take a quick look at, a couple of stocks in energy, is the equipment space. This is BKR. The company came out there up 3.5% today. They did announce an uptick in their rig count. So that's an improving outlook. A lot of these companies were pulling back. They were reducing their rigs and their production. And the big news here is that OPEC came out this week. They're talking about a possible 3 to 6 month delay in production hikes of oil. So that's really a big boon for these drillers. BKR offers a nice 4.1% yield, and there's also calling for 115% growth in this particular company for next year. So that's a peek into another area within the cyclicals. I did want to go ahead and turn to those biotech stocks because it is, again, such a vibrant area. We can take a quick look here. And I believe I did share with you, this is going to be in this area. We're going to take a very quick look at that IBB Biotech, and we can see that it's been a little bit volatile here, but it has picked up here of late. So I'm going to share with you a couple of stocks that you can access by looking at that scooter rating in StockCharts.com. And here's an example. This is NanoString, NSTG. And what I did want to point out to you is that there are a lot of the better looking or attractive stocks within the biotech space are cancer related. It's not all about COVID. So this particular company did report their earnings on Monday. It has had a nice subsequent advance since then. They reported a very strong balance sheet, and that's what investors want to see. Is the company, a lot of these are, they're not reporting earnings yet, but do they have enough cash flow to continue to advance and make it through clinical trials for their drugs? And we can see the stock had a nice base breakout on volume, MACD, and RSI now in positive territory. Another smaller name in this particular space is Trillium Therapeutics, another nice base breakout here. And then we can see the MACD had not only that nice crossover, it's now turned positive with a positive RSI. The company, again, not earnings quite yet, but they do have a really unique therapeutic blocker as far as attacking tumor cells. They attack the surface protein. I don't want to get too into it, but it is really advanced, and a lot of investors and analysts are excited as to the prospects. CRSP is the last name that we're going to cover in biotech. So I have another area that I want to share with you. But this, again, a little bit bumpy, a little bit volatile here, but they're doing a lot in the way of gene editing. They're working with Vertex. They continue to make advances. Last name here is SGEN, and I would argue not ready for prime time yet, but keep it on your radar. They're also involved in new cancer treatments. In October, Merck did invest $1 billion. They're now a 5% owner of SGEN, and so that's a name certainly to keep in mind. So from here, I want to go ahead and I talk to you about the short selling, that we did see in a number of travel related, as that unexpected but very, very positive vaccine announcement did come through on Monday. So we're going to take a look at a couple of these travel stocks. This is Expedia, and we can see this big gap up. And again, a lot in the way of the recovery play, but also that concept of short squeeze. This name did come up quite a bit. But I did want to also point out the fact that earlier, prior to this vaccine announcement, the company did report earnings 72% above estimates. That was on November 4th. So it did already have a little bit of an advance, a boost on earnings prior to this big gap up. So when we see these gaps up, similar to if those of you want to see a little more of how to treat gaps up, my last week Friday show talked all about that on earnings, but this stock is holding in remarkably well. That is what you want to do. You do not want the stock to go back below that gap up level. So it's holding in really quite well with those nice earnings behind it. Another travel related stock, this is Booking, BKNG, another company that did, and that was already a little bit on its way to having an advance as far as earnings and move up. Another recovery play area that we can take a look at are some of these restaurant stocks. And this is Starbucks. Take a look here. This is that gap up Monday on that recovery play. But I will tell you that they also are a company in this period here that came out with numbers that were ahead of estimates. Management feels that Q1 2021 is really going to be a nice ramp up period as far as an improvement in their earnings. Shake Shack, another one that gapped up on the recovery play. But this is all about another area that also reported good numbers. They also, management announced they're going to continue with their expansion plans. They're going to be opening 35 to 40 new stores in 21. Analysts think that is good news. Price target has been raised. Last one here is Cake, another one that gapped up, pulled back to this upward trending 10-day simple moving average upgrade, $44 price target on this particular stock. So I'm going to leave it at that. For those that would like more insights into this powerful move into cyclicals, where you'd be best served to put your money to work, and as well as growth stocks that are holding in well, take a look at my MEM Edge report. Use the link below. I have a special for a 4-week trial, and you can also take a look at a sample report. Everyone have a great weekend, and I will see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.